Okay, good afternoon, traders. It's good afternoon, good midday. How are you, Bobby? Welcome to Trade Setup and live stream. It is the 1st of June, nearly the end of the financial year. So, yeah, ASX. G'day, Jason. Oh, it's a bit of a gap and trap today by the looks of it. We'll go through that in a minute. But yeah, I was talking to someone this morning, and we were chatting about the just the movements on the open. And it was just a big setup, and we've just come and squeezed them all out. So the ASX has rallied about 100 points or so, more probably, off the lows. So catching a few mums and dads off guard with the negativity on the open, and then boom, up we go. All right, so g'day, Scott. What I'll do now, so quickly, I just want to touch on what you can see on the screen is just the profile for TradingView. So what I'm going to do with the TradingView, the stream now, I'll just talk through, what I want to talk about the major indices and that, is this what's happening in the US at the moment with all the riots and the protesting, is that going to create, at the moment it doesn't look like too much. It looks like the market's completely brushing it aside again, probably looking towards stimulus. There's going to be more stimulus because of the streams and the looting and all that sort of stuff, and insurance companies potentially coming in trouble. So I'm going to go through what the actual indices and what everything's showing. Gold, we'll look at crude, we'll look at these sort of things on the open. When I was chatting this morning, that's what I was looking at the indices, what they're actually saying. Are they breaking any levels? Is there severe negativity out there? We'll chat about that, and then what I'll do, I'll have to finish it for the TradingView, and then we'll get into what we normally talk about. So if anyone in the TradingView group wants to follow on with the conversation, you'll see the website. You can join in the website there, and you can go to our YouTube channel, which is not up here, but it will be on the bottom of an alert, which you'll be able to find on one of these, at the bottom of one of these alerts. You'll see, just go to our YouTube channel. Where is it? Here. Go there and you can join in the fun. Anyway, I'll carry on now. We're just going to talk about the indices. So what I was looking at this morning was markets obviously gapping down, and you can see it in the indices. And like I was saying to someone, it's not the futures price. So that the big boys are using futures. They're not using CFDs to trade. It was the CFDs gapping down. Gold actually gapped up because, or pushed up slightly on the open, because that's, they say you traditionally, times of crisis, you buy gold. That's what everyone's been taught. Indices were looking to open lower and sort of negate that little pop up into the close from Friday. What else were we looking at? Crude oil was actually up, which is strange. So once you start seeing these things that should be correlated and not playing out to what I guess the opening for some of the markets is showing, and what a lot of people would have expected, you've got to question it. All right, and even the Aussie dollar, I don't know exactly where it is now, but it took off like a rocket. If we look at that, so it actually didn't open too bad. I've got the daily chart. I'll show you that in a minute. I just want to start on the indices and then go over to some of these correlated markets. So anyone that doesn't know, we've got, I'll look at that now. I'll just get it up on a 30-minute chart. Computer's getting a bit inundated here. Aussie. Just go down to say, look at a 5, 15, 5, 5, I like my 5s. So here was the market opening, was about 9 o'clock or 8 o'clock, 7 o'clock. There you go. So the market opened here, and there was a bit of pressure, and that's because the indices were down, and the Aussie's been going in tandem with the indices. Problem is, you can see that the Aussie didn't really open down. That's where it closed on Saturday morning. It's come under a bit of pressure, and then up she goes, and that's what caught my eye. That with crude oil, we're not acting like the market's going to be bearish for the day. So it's a very good idea if you can jump on and just look at, even if you're using TradingView, using basically anything, look at a few correlated charts. And if you start following the charts and you start following different markets, you'll get an idea of what is correlated over. It doesn't have to be always correlated, but it can be what's being correlated. So the Aussie's correlated with the indices at the moment, whereas the Euro's not so much correlated. It's more just purely the US dollar. Um, and crude oil, if crude oil is going to get sold off, then you could probably go, okay, the indices are probably going to feel a bit of heat for the day. But they weren't really. So, it's interesting. So that's what I was looking at in the morning. And then as soon as we started getting the market starting to bounce, you knew that it was more of a trap than anything else. Okay. So you knew that, let's go over here, Y mini. You can see that's open down, and that sort of action was by the time the Aussie started to lift. And that wasn't saying to me once you start to gap down quite strong, and unfortunately it's retail that opened the market and wholesale or the pros will close the market. What I was talking about to someone, you'll get your mums and dads will open it and then they get caught on the wrong side. More often than not, even if it's just a squeeze, they sell it on the open here, thinking the market's going to cave in, just turning completely bearish. It's the fear or whatever it may is. Maybe they're just closing out positions, long positions into the close. They were going long into the close, looking for a bounce, and over the weekend it wasn't looking too good, so they just closed out. Who knows? But they're getting caught out, and the market starts to get supported. And it was mainly in here around say 9:30 or so. It was starting to get supported. So I was watching that, thinking the market is not going to be bearish today. G'day, Pete. Nathan, how are you, mate? So that's what. If you can go through and just pick out a few different markets that have been correlated and try to get a bit of a gist of what could be happening. Are we going to get trapped, or are we setting up for further downside? Now, if you saw gold starting to rally hard, crude starting to fall over, and the Aussie not picking up, but actually going down with the indices, then you're going to have to sit down and think, well, maybe I don't want to be long shares. I might want to get onto short positions or something. But at that stage, the only thing that really under pressure out of all the correlated markets were just the indices. Okay, and the Dow was really the only one. When we had the ASX on the CFD, you can see it gap down as well, but that's got nothing to go off because there's no futures. It was going off the E-mini, sorry, the Dow E-mini. The Dow futures were open. I think they opened around 9 o'clock in the morning. So they were the futures prices playing, but it's the overnight futures for the US. So they're a bit less liquid and they can be played with a bit. And you can see with this rally, I've just been trading that. I actually missed it on this upside here, but I've been trading, chipping in and out, and it's sort of net going nowhere type of morning. But yeah, this market looks like it's going to close the gap at 24,480 on the Dow, and the Hang Seng's powered up as well, so that's doing really well. You can see here we go. The Hang Seng here gapped up through. This is for me was a key level. The half an hour chart, the 30-minute chart. It's gapped up and it's actually holding above that level. So there's a good chance that we might have a bit of a flush lower and then rally back up. Whether the rally is going to happen into the 2 o'clock close or it's going to happen at 3 o'clock onwards, I don't know, but it might need to squeeze some of these buyers out first, reset, and then go. But we'll see. It's looking more positive than anything else to me at this stage. I mean, it could be we might find the market's sort of positive into the European Open, it sort of hovers, and then we come into the US Open, and then we get knocked on the head. But again, all we can do is sit there and watch and see what happens. I just want to minimize something here. Oh, there you go. That's not it. That's the one. All right. So that's looking at the Hang Seng there. I just want to go over gold. You can see gold, which, like I said, on the 5-minute chart. So it's pushed up into sort of a resistance zone. I can't find that resistance zone. It was from a while back. Around that 1740 zone. Let's just go back out. Pushed up in that resistance zone, and that was on the open. It's big spike up straight away. It was sold into. Okay, and then it's been edging up. It's sold into as it's come back. It's back up at the moment. So it'd be interesting how this plays out. Whether we get more rejection up here again, and then the market starting getting smacked down again. We don't know, but at the moment, correlated market like Aussie is still holding up quite strong. The indices have bounced back quite hard. I would suggest potentially if the indices are not going to bounce back, I would say that's going to hold. I wouldn't be surprised if that holds. And we've got a bit of a long squeeze that could potentially easily play out, meaning that a lot of people built up on the longs on the long side from Friday, I think Thursday as well. Turn around and get squeezed out of the action around this 1740. Maybe it's going to retest the highs, but just have to wait and see what happens over the coming hours into the European session, what happens through Europe and the US. So be really interesting to see how the US goes. I'm a big believer that these markets are getting propped up out of hours, so it's in the Asian session. They're getting propped up quite well. So especially the Dow, you can see the Dow will grind lower, pop up, grind lower, and every time it starts to hit a few shorts, bang, it turns around and cleans them out. And it can look like a perfect short setup, and you just know that it's going to turn around and squeeze them straight back out again. So you've got to be wary of what's happening with the Dow. It's they've got the algos on. They really are chipping away on the upside, especially when you've got the market bias down at the moment, like it was on the open. It's just enough fuel to squeeze it straight back out and try to close that gap. So I'll have to see if it does close that gap. Where is it at the moment? So this is delayed, by the way. It's still, we're potentially finding some pressure up here, so it might have a bit of a pullback, flush out some of these longs from this leg up, and then reset and go again. I mean, who knows? But if we go and we'll go back to the AEST at the moment, which has gone from, like I said, where are we? Up 45, it was up 50 just before. If we go to here and look at the intraday action, it was down on the open and then ramped straight up again. The 5-minute chart, so you can see it was down on the open like a lot expected. Seeing the open of the futures market, the futures market opened down. That was more of a trap than anything else. It was opening down and started to get lifted. Whether this is going to start to roll over from here, or we're just going to keep ploughing through. Intraday, that's a strong bounce back up. It's not like we saw the sell-off on Friday, sell-off and sort of go sideways and just that little pop, that drop into the close, sorry. We've sold down on the open and we've come straight back again, basically to where we closed on Friday. Actually, we're about higher, aren't we? So that's more of a bullish sign to me. We could reset here. We could go sideways here, reset for a rally in the US tonight, and we pop up tomorrow. But if we go over to just the daily charts, I want to get over to the daily charts here. That's positive. It's not, that to me, rejection from today, if we finish in the green today, that's quite positive still. We're still holding, this is on the daily chart, don't forget, we're still holding, this is a big flush lower. Okay, we're holding this inside, so we basically consolidated through, say, 51 up to 50, 55, 50, 56, consolidated this action through here and kept holding high low. So remember, all the talk then was negative. It was all negative. So when the talk's all negative, it's really hard. It's sometimes just best to be biased up. Okay, I'm not saying that's a be all and end all, but the news is always going to be negative because that's what sells. But if you can look at the price action in conjunction to that negative news, I guess, being negative rhetoric, then what I was looking for was actually, at that stage, I was looking for a bit of weakness. We had a short on, then we had another short on which didn't win. We've been in and out, so I think net probably break even up slightly on the short side. But you can see there's been a lot of good setups intraday on the shares. So if there's a lot of good setups on the upside, then you probably know that there's going to be some more upside to come. And that's what's playing out at the moment. Now, this level here, 59.45, I think it's around a 50% retracement of this move down. And we touched on that on Thursday, backed off on Friday. We could be bound to test back up there, maybe not today, but the coming days or so. And then we'll see if it fails again. It could just go straight up and through and extend this move up to 62.70. And that's your first leg up. Consolidate, you take it off the low to high, you project that up, and it can take us to 62.70 easy. So if that's the case, there's another 300 to 450 points or so, 400, nearly 500 points on the upside still, if that's what's to play out, because the daily, nothing's broken down just yet. We've had every reason to go. The economics, the fundamentals, the global economics are horrible. The US is horrible. We're not doing so great either. And then you've got, job losses, and we know there's probably going to be a reoccurrence. It's going to be another outbreak. And then what happens from there? That's what I'm going to find interesting, whether they're going to go into lockdown again. I really don't think they're going to go into lockdown at all, because that will just kill the economy, kill the global economy. I think that's the last thing they want to do. Hopefully they can just work their way through it. But there's going to be further outbreaks and all that sort of stuff. I just don't see how it's possible to stop that or flatten the curve out when people come out of lockdown again. And on top of that, you've got all these rioting and what's happening in the US, which, if anything, are more probably psychological for traders. I wouldn't want to be bullish in these sorts of times if that's still kicking off or if that's still going strong. And if it starts to get contained, what to from there? I would assume there's going to be a few retailers going to find some severe pressure, come under severe pressure because of the looting and what's going on, just the havoc that's been caused. And what happens from there? Do they get insurance? There's insurance, or do they get a bailout again? Um, Insurance companies, what's going to happen there? If they've got too many, I mean, there's quite, I don't know how many states it's been, but it's quite a lot, isn't it? I guess the damage bill is going to be pretty high. So all that sort of thought, what's going to go into going further, so going forward in the coming days, what's going to happen to at these higher levels to the psychology of traders, or are we just going to keep jamming higher on the hope that there's going to be more stimulus from the US? And that, I don't think that's going to be such a good thing longer term, but that's what the market is being buoyed off at the moment. So interesting. That's the, if anyone's got any other thoughts, just whack it into the chat, and then we'll still coming through loud and clear, I think. Yep, all good. So that's the S&P. Sorry, that was the XJ. We'll go to the Dow. Now the Dow on the daily too is not. We had a red candle on Friday. What we do, it doesn't really mean too much. Sorry, that was a green candle on Friday. It was a red candle on Thursday. There's no reason why we can't have a bit of a back off and we get bought up again. All right, so this overall, this trend is still up. Same sort of thing as the ASX. We had a pop up, pull back, high, low, pressed up. We started to consolidate here, bit of negativity. Didn't really go anywhere. Didn't break any anchors. You can see on this little washout of this previous low and this low. At the time, that was pretty much, I think, the line in the sand or the anchor to the uptrend. Wasn't much of an uptrend. This had every right to roll over, but it couldn't. That, you can see that there, that day there, would actually flushed out the lows and finished strong for the session. It just led to a lot of short squeeze, a lot of a short squeeze. There would have been a lot of positions sold off or sellers into the market, whether it's options, equities, futures, whatever it may be. A lot of shorts turned around squeezed out. Then we consolidated this high. So we were talking about this, I think, last week. If we consolidate under here, expect it jam up through that resistance zone around 24,600, say. And it did. So we're looking for that extension up. The next sort of resistance zone, which could come in, is that higher up here around 27. So like I said, at the moment, prices are heading higher on the daily anyway. And if we start to break it down, just go down to an hourly. It's, I know this is the index, but the mini's pretty much all the losses from the open has made it back. So there's no reason why this mini won't open back up here and plow through these highs from Friday night at around 25,740. So that was Thursday night. So that will be an interesting little thing to see tonight. We've also got SPX, the broader market, same sort of action, still heading higher. You got a low in here, it's holding, another low potentially holding. Once we get up through this high, which I sort of believe we will, get up through this high, this is your anchor to the uptrend at around 3,000, doing well. Trump's not picking on China anymore. I think that was some good news, which buoyed the market into the close on Friday night or Saturday morning, early hours of the morning, and that's what gave the market a bit of a spike. They were expecting a lot worse from his tough talk, but he didn't do anything really. So that's buoyed the market, and there's sort of any reason it could be construed for a sell-off, that's been brushed aside. So, and it's been negated. Just don't expect Trump to cause any sell-off in this market coming into elections. I don't see why he would. It's the dumbest thing he could probably do. So yeah, that's the markets at the moment. We should look at gold. Gold we just had a look at before. We're up at this 1740 zone. Potentially we'll see if it can back off here or if it's going to roll over and keep. We want to see if it holds these MAs up. The good thing is, if you look longer term, we've broken down, up out of that trend. Whoops. Broken that level there. Consolidated this high low here, and then bang, up we went. So that's a good sign for the bulls, but we could still be making this inside lower high, an inside offer zone, you call it, at around 1740. We're struggling around that area. We popped through, rejected it, try to go again. We were struggling up here, struggling up at the highs, some sellers coming in, starting to get back up again. We'll see if it can continue on. Again, like I said, if you see the equities kick on hard, I don't really expect gold to go, but you never know. Sometimes it's correlated, sometimes it's not. Sometimes it's safe haven, sometimes it's not. At the moment, I think it's more correlated to a sell-off in the US dollar than anything else. US dollar heads lower, that should head higher in dollar terms and US dollar terms. Gold and crude, oil. you can see, let's just look at a 5-minute chart. Now, where did we open? We opened here. This is this morning. Popped up on the open, had a pullback, and we're starting to rise at the moment. So if crude's showing anything, it's not showing any a reason to sell the equities at the moment, reason to sell shares. If this keeps holding, we start to grind up, through the European session into the US, then anything to do with the, potentially some sell-off because of the riots and stuff, I don't expect to play out. So anyway, any questions there, guys? Anyone got another view? I mean, one of the hardest things to do is go against the flow of a negative market. Everyone finds it hard. I mean, you can't say you don't find it hard, but it's kind of like the path of least resistance. If everyone's negative, you're either short or you're not, or you don't want to be in there. But either way, the fuel would be on the upside. Okay, so if everyone's thinking the market should go down, you're either betting on it or you're not. Okay, and if you're betting on it, you're short, or you've got out of your share positions. Now, either way, if you're short, you have to buy it back, and if this market starts to creep up, there's going to be a lot of buys, stops going triggered, and the market to push higher. Now, if they don't, if that happens, on top of that, anyone that may have sold out is looking at it going, oh, look, the market's banging back up again. We're continuing up. Let's jump in. And that, because, fear of missing out, or that FOMO effect, can drive the markets high. But either way, just because everything's saying it's going down, everyone is saying it's going down, the news is saying about the pressure on the markets to come, and the markets turn around and gap down, bang, straight back up. We've seen the lows from this morning. So it's kind of a hard environment to trade in, but you've got to realize sort of what's happening. What is the path of least resistance? When it's a bull market, it's easy. You just buy on the pullbacks, buy on the dips. But we're not. We've got every reason to go down, and we're going up at the moment. So you've got to bear that in mind. All right, let's get into some. What I'll do now, I'm just going to say goodbye to the trading view. So just remember, with guys, if you're on the trading view and you want to continue on in, just go to the website. Go to the website. Go to that link that I was mentioning before. And if you just drop it down, you can go to this is our profile page. Pick out an alert, and it should be at the bottom of the alert will be our YouTube site, and you can join in. Something down here, just click on that. It should take you straight to the live stream at the moment. Okay, so thanks very much for joining me, guys, and we'll continue on in. Cheers, bye. All right, so that's all done. So put up anything you want to have a quick look at, guys, and then we'll continue on going. I just want to see where that. Just going to get up a Dow chart now. So it's popping up. So it's very choppy up here. I think I had a couple of longs. I had a long initially. Was up well, turned around and stopped me out. And I've been long a couple of times since, just made back most of it down very, very slightly, but nothing much to worry about. You can just see that chop, up at these highs. It's just closing that gap. I think I was actually, if you can see, I was just about to alert it, and it took off too quick. Alert it for a long back here to the group. And it's, it didn't really, by the time you start fluffing around, getting out the alert, it's already gone. So what we can do is talk through. I'll explain to you why. I mean, if we can't trade it, we might as well know why we're trying to trade it. Everyone can see that chart. That's the Dow. It's a 5-minute chart. All right. So that's the kind of entry we talk about quite a lot. You can see the market's headed down, and look at all this flush, all this wash. And that was, I think, from Friday night, isn't it? Yeah, Friday night. It just was rejecting those lows. And that was after Trump, I think, after the speech, and it started popping up. We popped up into the close. Now, we've got that gap down, but it hasn't taken out these lows, and that was getting supported in there. So as soon as you see this kind of action, this is important. As soon as you see the flush lower start to get buoyed, potentially in there, that's what you're to take note of, especially if you're intraday trading, because that would mean that anyone that's either shorted it here expecting the market, because gold was up at the time, everything was looking like a big sell-off, all the indices were down. If it doesn't start to play out like you expect, you either want to be quick to get out, or you want to make sure you've got your stops in place to not get carved up if it does bounce. and it has. It's bounced quite hard. So that there, you would expect a sell-off. Especially on this candle. If you can see this little red candle here, you should have expected something to. If I can mark that up. Don't worry about that. They don't work that well. Don't like them as much. Delete that. Oops, I'm in trouble. You'll see this candle just in there, that red candle there. That's what I would have expected to really start to kick on, but instead it's touched down those lows. It probably washed out the low by a few points and then bounced. So that to me was like, okay, you've got to be careful. If you're going on the short side, be careful. There's not going to be a big flush up and a big squeeze, a massive squeeze back up to the highs, because you could be looking for that gap close, and that's pretty much what's played out. So once it started to do that, and you got that lift by here. I mean, you could have gone long sitting on top of the MAs. It did flush up, and then you got that secondary sell-off, and then as soon as you started to get this price section, okay, we got that green candle here. We come back down, retest this low, even a slightly higher level. That's a prime setup for us. So what I mean by when you've got the market is going up and you get a pullback, okay, you'd expect that to go lower. So for me, that's the entry, okay, and that's all within an uptrend. So that's your pullback, but we don't break the anchor. So the anchor to the uptrend would be, further down here, for instance. So if you're looking, that's the uptrend, and the anchor's way down here, and you get this pullback, and everyone's been negative. It hasn't broken the anchor, so it's giving you no reason to sell just yet. And as soon as you start getting that inside level, and it's dragged in a few shorts here, don't forget, that inside level holding a higher low here, you know that they're probably going to attack that lower high and start to squeeze out whoever was shorting it there. And that's pretty much exactly what played out. If you took a buy on the break, which I didn't really want to because it's quite a large stop. I think it was about 100, 376 down to, oh no, that wasn't too bad. Say 380 down to 320. It was a 60-point stop. So you could have traded that on the break. I mean, this is all inside hindsight with your stop below, based around this sort of pattern there. All right. What I was looking for was a little pullback, a bit of a stutter, and then a really push up into that high to close the gap, which it has done now. So that trade was quite good. But you can understand what I'm talking about by dragging in sellers, because it is so tempting when the market's gap down low. It's so tempting to continue to sell it. Okay. And that's, people do that time and time again when you're selling against that trend, even though that trend is just, it's only a 5 minute, you know that the market's got more than enough oomph at the moment to squeeze you back out again. So that's it, just looking at that. So look at that Aussie, it's powering higher. What are we up now? Probably 50, 60 points. Hong Kong, look at that big, that's a 30-minute chart, sorry, 4-hourly chart. If we go to 5-minute on the Hang Seng, it's strong, and that's because it's broken through these highs, broken through on the open, and then, like I said, because it doesn't pull back, if it's going to break it and it's going to finish, it's a bit of a flush, you'd expect it to come straight back down again. It's getting held up here, so I do expect that to continue on up. Okay, so let's get on to some shares then. So who was first in there? We've got, I know there's one somewhere, Lauren SFR. To go out to the daily, consolidation sideways to me, it looks like, and it's bounced off this 435 zone. This is on the 30-minute chart. If we go back to the daily, and it's a tough one because, and it may be, no, it's not really, because the sell-off, this to me is consolidating sideways. I wouldn't be buying it just because it's bouncing off that MAs there, because it could easily, bounce, go through, and it becomes a sell because you've got all this zone through 460, 470. There could be a bit of an issue. You can see that zone through there, so we'll draw that up. All right, screen snapshot. So we've got a few things. Momentum's heading south. Momentum's heading south. the volume's not so good even today. It's not too crash hot. You got a zone through $4. You'd say that it's tested it 3 times there. Okay, we should head higher. It did grind up until we got through these highs, up to around those highs, and it backed off the first time. It popped up through. Next day, straight down below again. So there is some selling pressure coming in. You have to be bullish there. You have to hold the MAs from here. I would expect, which is and that higher low. I'm not too confident because of the way it's pushed up through and finished just above the previous high here and here on the, what was that, Friday, Thursday, Wednesday, finished up above it and then gave it up the next 2 days. It was pretty quick to give up those gains. All right, so I'm not confident with that price action in that respect. But if we can hold here and we can start to get, this is that zone there. We pushed in, popped up, we're straight back down again. If we can start to hold higher levels, then maybe it's a buy and just minimum risk if it can start to break up. Okay, and you want to see some volume start to come in. If it doesn't, I just wouldn't be too. I'll be a bit nervous about getting it there. You can see the stochastic's gone from overbought, oversold to overbought. Good push up, all the way back down again. Good reason to buy because it's holding. Stochastics are back down again, sort of that oversold territory, and then buyers start to lift again. We've gone back to roughly overbought territory again, and we're not getting through that zone. If it was strong, you would expect it to plow through it. But at the moment, I think where the market is at the moment, people are still tentative. And just looking at that, if we go back to the weekly, not too crash hot on the weekly. That's negative to me more than anything else. It's rejecting 1, 2, 3, 4 times. 4 weeks it's rejected that 450 zone. We're there now. There's nothing to say we can't reject it now. Well overbought, up around 80. So we could easily flush lower, get to 350 and then rally. So just be wary that the 30-minute, the weekly chart is extended. There could be people waiting on the sidelines watching it going, look, I want to get out because I'm long from $6. And you might be looking at some shorter term traders that are looking to get in, and it's a bit of a battle at the moment. And if the market starts heading south for whatever reason, then expect that to go with it. All right, so what was it, Sandfire? ZNO. Who's asking me that? Deepak. Thoughts on ZNO? I hate it at the moment. We're out at 210 from 190 something. Yeah, today just super strong, and it's just caught a lot of buyers chasing. I would expect. Look at that, 200,000 at 237. It's on its highs. It's just plowing ahead. So that's super frustrating, and that was probably a mistake from me to get out. But it happens. You can't. I guess you don't get too worried about taking a gain when it could have been bigger because it could have easily been a loss. Thoughts on it now? Would not go near it on the long side. Are you long there, Deepak? Or are you looking to go long? I mean, I can't buy that. I can't buy that up near the highs. I wouldn't go near it because I think the only one left to buy it is going to be your mums and dads who might go through the highs and turn around and get smashed. Just imagine if the US is down to 500 points tonight, what's going to happen, what you would expect to happen to ZNO. So if you're buying it here into the close because it's a strong day, you're buying it right up to those highs around 240. I just think you're asking for trouble. If the US is down tonight, 500 points, say, or 400 or whatever, you're going to gap down on the open. And then what happens from there, I mean, you might get lucky and it bounces back again and it continues on, or you might not. And all of a sudden, you're back down at 170, you're getting slammed on your trade, and you've got to just lick your wounds and close it out, I guess. So I wouldn't buy it up here. If we're looking at intraday, even intraday, it wouldn't go near it. On the 30-minute chart, no. Extended on the 5, extended everywhere at this stage. So if you've got it, tighten your stuff up. Awesome. Thanks, Jason. You're just trying to rub it in, or anyway, I just could not pass it up in one day. I think it was 20% or so. I was watching it going, just got stopped out. And I think to be honest, I think we got stopped out at $2 on the final leg by half a cent or 1 cent. So stopped out here, 1 cent, consolidated and went again. So a bit of bad luck there, but anyway. Now back to the daily. So we got FI AESL. I got it right? ACJ. That makes sense. Can't spell. That is looking good. You go back to the problem is the weekly's getting up a bit extended, so you might be coming into some selling pressure up here. It doesn't mean that it can't just kick on. And what it will do, if there is selling pressure there and it starts to jam through, they've all got to buy back. If they're shorting it, they're going to have to buy back. If people are waiting for that break, they're going to be fast in it and it's going to probably spike quite hard. Either way, it's got some selling through 480, around 480, 490. But if you're buying that, you've got your risk just below 440. It's not too bad. There's been no volume in this move, though, which is a bit of an issue. It's not massive volume. There's a bit of volume here, but you can see the average is dropping a bit. So if we get up here and we start to fail again, okay, you're not risking too much anyway. But that there from that big sell-off bounced quite hard, and then it's basically been consolidating ever so slightly, holding higher levels. So that to me looks like it's going to start to accelerate soon. So look, Pete, doesn't look too bad. But you just got to know, like I said, where your risk is. If you buy the break of, buy 490, you can, as long as it doesn't go through this low at 460 there, it goes straight up from here, breaks through 490, you can hold your stop at 450, thereabouts. You're not taking a lot of risk on it. All right. And then your first sort of port of call of problems maybe is up to around that $5 even mark, just below $5 at 495, this high in here. We got that initial sell-off, but that weakness in there, obviously with the rest of the market, that big bounce, that day there got smacked down. It's been soaked up. All the buyers have been soaking up the selling pressure that's been coming in. So sooner or later, if someone's accumulating or whatever, it's going to start to let it run soon, you would expect anyway. So that's not looking too bad. TLS, I haven't looked at that for a while. A bit the same. It doesn't look quite as good because it's retesting lows. It's starting to lift. I mean, if we consolidate here above 320, I would like to see a few days there. Then it's worth a buy. Weekly, I mean, I know it's been knocked down. It's been back to these levels from 2018-19, or give or take. All this sort of buying pressure that was pushing it back up again, it's been smacked back down again to 3 because of the sell-off. Is it going to repair itself? We've got this little, whoops, is it here? It's about that level, say 330. If it gets up and through there, maybe it gets up through there, then you look for the first pullback. You want to see it sit on the MAs with some volume. It's got some volume now, and then up we go again. I don't like it because it's heavily traded. I mean, that's my problem. You might as well trade the STW, the ASX. I don't like trading these individual stocks because although that could look like a buy, it's getting, if people unload on the STW because the Dow sells off and we're getting, so that'll go down no matter what it looks like. So I'm not too keen on trading these really big, heavily traded stocks that are people put in super funds or whatever it may be. I don't like trading them that much, really. I don't find the setups that positive. I'd rather just trade the ASX along, and being able to get out at night or hedge at night as well. 5GM. Yeah, setting up, maybe not. You can see this, if we're looking at that 5-minute, so we'll look back at the intraday chart. The daily, it's pushed up to these highs at 115. It's probably getting a bit of momentum buying here. That could easily go. If you're going to look at that as a buy through the 120, you're looking at, I'll draw it up. You'll be looking for it to extend, wrong one. The reason why I don't like buying these is because it's had one big push up here without a pullback, really. And that's a handy push up. That was 20% thereabouts, 20% rally. So what you've done, you've come into, you got this sort of a zone through here. It's flushed out there. So we've got that 115 area, which it could be, got all the days. May find a bit of resistance. If it's going to go, the fact that it's had this push up off the low, pullback and consolidated through here, that's a good sign. So if you're looking, I can't grab that red line, but if you're looking for something, you could be looking for, move to 132, for example. So it could be worth a buy and a break, but you don't want your risk too far away. Your risk is going to go below there because that is just a high low on a shorter term time frame. All right, this is the longer term time frame. One leg up, pull back, high low, secondary leg up. Where's that going to go? As long as we get through that level at 115, that could extend up to 132 or thereabouts, which is just that initial leg up. Okay, so and it's good because it consolidated that zone through there. Again, you got to remember if it is stretched, and I find these ones harder to buy rather than buying it in here because you're buying it out of contraction. By contraction, I mean, excuse me, contracting lower, you're buying it up out of contraction, and you're trying to sell when it's extended. That's the aim of the game, and just see if you can manage your risk on the way up, get as much out of it as you can. So that's what we'll be looking for at the moment. Now it is not the unknown; it's the known. It is stretched a bit, so you've got to have your risk tight because it's more of a, you're trading with the herd at the moment. You're not trading against the herd, where the bigger gains are going to be. You're trading with the herd, and if they continue it up, great. If the market drops tonight and you're in, expect to probably get stopped out or a bit of a pullback, just depending on what the overall market does. It's really hard. I'm always risk adverse with this kind of market because I feel you have to be, because I do expect a sell-off. You never know when it's going to come, and it probably won't give many a bit of a heads up. It'll just be you wake up one morning, bang. Remember during the GFC, waking up seeing 1,000 points on the downside, you go, wow, that was nuts. And you didn't really see it coming either. There's obviously that skittishness about the markets that was a bit worried, but they were still going up, and then it turns around and just gets knocked on the head one night. Yes, that's 5GN. Could be setting up, but it's just a short-term trade, if anything there, Laura. I would expect anyway. OSL. Not too bad. As long as it holds this 10-cent level, if it pops up through 12, I mean, the MAs are still down. I don't like to buy below the MAs, or say you bought here, it could easily go down through 10 and go lower. All right. What you want to see is sort of this pop up, first pullback. What happens when it pulls back to the MAs? If we can pop up the MAs cross, and you might find that it goes on without you, but I'm not worried about that too much. I want my setups to play out. I want to see that it's going to get some decent momentum. I don't want to just buy and hoping for that spike like that, and then this day it gaps up, and then you're caught holding it all the way down when it pulls back again. I would rather see it pop up, be supported on the MAs, and see what happens in the next rally, and see if they can get a bit of a momentum, and then just managing your risk, and then try to follow that momentum up and see if you can get a bit of a run on, which those moves tend to stick a bit better than just something, especially in this environment, something that spikes up hard. You tend to feel it's going to come down hard as well. So yeah, for me, it's more nothing wrong with it really. Oversold down here, bounce back up, oversold down here at a higher level at 10 cents. So it's holding basically a higher level from 10 down to 8. You really just want to see it pop up through 12, get up through 12 on the first pullback, see what happens with the buyers in the first pullback. Are they looking to jump in at higher levels to support it? Great. If not, that could be a bit of a flush and then get hammered back down through 10 cents. So for me, I'd just be keeping this on the radar for now. There's no reason why it can't push up through that level through 12, finish below, and then bang, straight back down again. Because you're still fighting against this double top up here at 20 cents, lower high, still some pressure there from sellers or people looking to close it out. And it is very, very choppy. So yeah, just keep an eye on that one anyway. Oh, that's what I would do. So what do we got next? DDR. And then DDR. To be honest, wouldn't go near this for a buy. If you're long, good. You want to tighten up your risk because it's extended both on the weekly and the daily. So you ask yourself, and it's just got through some highs. Maybe ask yourself how many more people are willing to buy it up at these levels above 8 to support your trade. If you're long from way earlier on, I would be locking in below 725, for example, 730, 40, 50. Not 50, sorry, 7, 10, 20 or thereabouts, just below this high low. You can see that's what I'll be looking at. Below this high low and see if it can kick on. If it kicks on, great. If it doesn't, and we turn around and we just flush straight back down again, rather be stopped out there and just watching to see what happens. Because it's just these last couple of days, the volume is easing off as it's got through to new highs. It just means that there's maybe less people willing to buy it up here. And look what it did back in September, got through the previous high, and we fell away from there. Okay, could be doing the same thing through the previous high, falling away. Okay, especially in this environment. Okay, so Dicker data, ELD, going up. It's extended obviously on the weekly, and we're starting to get, well, I don't really follow it too much, a bit of divergence on stochastics. So it was extended here from buying pressure at around 9, less buying pressure, and it's got a bit higher, meaning that potentially there's sellers starting to come in. Good. No, perfect. So all you can do, Lauren, is just watch it and see if it can kick on even further. You don't really want to close it out. Look what happens if you do that. You get ZNO kicking you in the pants, something like that. So your weekly, if you're long that also and you've taken some profit, great. You just try to follow up with your stops. It's still sitting on the MAs here. We bounced Friday. It's a down day today. Okay, so be it. If it chops around and still holds above the 950 zone, that could go again and take out 1050. You don't know. All right, so that's, it's on the way up. It's just, are we too extended on the weekly? Are we going to start to, fail at around 10? And then we're going to go into a bit of a pullback there. And there's just something else, if you can see. I just want to show you this. That's probably too far, isn't it? Yeah, it might do. The way I'd always look at it, you've got, I think it's this leg up. Before we failed, come down to here. If you extend it out, you're probably not far off the same from low to high, even if you take it from here. That low to high, you're about the same. So it's pretty much extended up at around, was it 10.25 thereabouts up here? So has it got much more in it? If you want to get long, I'd be looking for something better. If you are long, I'll be tightening risk and just see what happens. So that's the weekly chart anyway. You can see it's just running out of steam up here. So I'll be thinking something else if you're looking to get in. SGR, let's have a look at that then. So looking at the weekly extended, see it's bounced back quite a lot from that stone to tango. It's a big stock, 3 billion, done 90 million today. So it's what I was saying around the ASX. A lot of times, there's a certain range I like to trade, that sort of mid-range stock. I don't like trading the large caps because they just go with the ASX. There's others that don't necessarily. When they start getting a bit of momentum, even when the ASX is down, they can go up. And when the ASX is up, they can go up. So they tend to trade individually until there's a massive sell-off. And that's not what we're seeing at the moment. Whereas the others will go up and down like a yo-yo along with the ASX as people in and out of the top, 20 or 50 stocks or whatever, the STW, the buying and selling that, whatever they might do. So I don't like trading those big ones as much. In saying that, look, that's extended for me on the weekly. Not really looking for a buy, but it doesn't mean you can't drop it down. You find, okay, this is the first time we're sort of sitting above the MAs. When we pushed up here, failed back below. The MAs haven't crossed. We've come back up. So we're sticking to the 20 at the moment. So if we come back down and sort of test a little bit lower, but we hold roughly the 280, 290 zone, then yeah, that could be a bit of a buy, but you're going to make sure that your stop's fairly tight because you are extended on the weekly time chart. And you're always going to take note. If it is extended, I mean, there's no reason why it can't keep going, but the probability is what you're looking at, not just punting on it, going high because everything's going high at the moment. You're extremely bullish. You'll be looking at that on the weekly, going, well, the probability it's going to go higher is quite low. So if I'm going to buy it, I don't want too much risk. There's no reason why it can't go higher. It is setting up for me. It could grind, so you can be in and then adjust it every day just to see what happens. So again, I mean, you probably could have bought that. What was that high? 316. Would it get to 318 today? You could be in, break at the high, stop around 280 and just see what happens. And if you get stopped out, there's a good chance if it doesn't continue up here, it's going to start attacking around 250, these lows. And if we start getting this kind of action, which I wouldn't want to see. It's quite controlled up here. So if we start getting, breaking down to 260, I'd be bailing on that pretty quickly. So it needs to hold around 280, 290 if it's going to continue higher. All right, there you are, done through EHL. And then see what's happening here. So we're still, look, we're hanging in there. Just want to see where the overall, where the Dow is and everything. That's not where I was looking. I was looking here. Dropped like a stone, so I'm happy I got out of that long. All right, so there's a bit of a pullback. What's happening to Hang Seng? So Hang Seng's actually holding up. I would expect that to be its next half an hour to stick around that level. I expect it not to break through 650 thereabouts on the Hang Seng into the 2 o'clock. I expect it to hold on to these gains, but we'll see. The Dow's been knocked down 462. It's only about 50, 60, 70 points. Bit of a flush out at these highs, so it could easily flush the highs out. Actually, be interesting to see. I want to clean this up, but if we get a lower high in the Dow for an index alert short, just see it's worth keeping an eye on because there's a lot of longs built up here. All right, so we've got that push down. A lot of short sellers jumped in, got squeezed out. So there's been buyers stacking up, failed, closed the gap. If we start to come back up and a bit of a grind, that's where you could be looking for a selling opportunity at a lower level off a shorter term lower high, if that makes sense. So just bear that in mind, especially if it starts to grind back up to these highs and we start to fail a bit earlier, at a lower level. That means there could be a bit of a push back down to this zone around 25, 200, 100 and 200 points in that if it starts to play out. So I'm going to keep an eye on that. We go too much lower from here and then start to consolidate it down here, then it's a reverse. Look for another run up through 25, 500 potentially. Where are we? So the next one was EHL and ZIP, and then we'll finish it there. EHL, I was looking at that. I think it's that. It's a tough one actually because it's going sideways here. You can see the fact that we did push up in this green candle, did push up and fail the next day. It's like it's saying it doesn't want to be too high. There's not too many people want to buy it on that break through 120, 30. They're not willing to because it hasn't retested any sort of lows. It may consolidate through here and go again, but after this break, I want to see it hold some higher levels before I start to look for a buy opportunity. I don't want to see it back testing $1 without breaking through. Sounds stupid, but if we don't go back up to 120 or 25 from here, pretty much from now, I don't want to buy it. So I'm more inclined to think that's going to hold a lower level and potentially squeeze out some of these longs built up, or even built up the last month or so, month and a half through this period. So you can see there's probably a lot of stocks that are starting to struggle. I mean, like I said, doesn't mean they can go up, but if there's too many stocks starting to struggle or going sideways or consolidating sideways here, and the ASX is starting to look a bit stretched, there's a chance that, it's telling you that it could be a bit of a flush lower again. And again, look at that volume. The most decent volume in the last few days was negative. Rejected that 120 area. So for me, I'd be a bit more concerned that could roll over to the lows. And if you go and buy the break up through 121, you'd probably best to wait till it gets up through 125. Buy the break of that, we just stop below $1. But again, that's a massive stop loss in percentage terms. The weekly, it is down on its knees in a lot of stocks. So I've got this mentality with indices, which is my main background, indices, FX, and things like that. Shares is a lot easier. I mean, you basically be on one side of the action most 90% of the time, 95% of the time, just a buyer. So things like this, a good quality stock, I know nothing about it. The fact that it's down around $1 is always going to be a bargain to someone. And the fact that it's down $1 in a good quality stock, if you're holding it from $2, you're probably going to continue to hold it. Right, so there's not a lot of pressure, whereas the indices can chop up and down just as easy. It can go up just as easy. It can go down, and vice versa. Same with currencies. They're more hovering around the zero line. You know what I mean? So zero line gains and losses. Indices, sorry, shares is zeros. That's the floor. So if good quality stocks like that, that's down on its lows like that, people look. You know, you got value traders, you got investors, you got everything that are going to be biased up. So that's half the market probably, or even that's a hell of a lot more than that. Half the market's going to be biased up on it. It's just whether or not they're going to buy it now or wait for it to lower. Is going to be a bit of a squeeze on some of the recent buyers, all that sort of stuff that's going to go through your head. But ultimately, um, the fact that it's had that big flush lower and we're popped back up and we're consolidating, it may cap the downside even if we break through a dollar, back down below a dollar, might get to that 80 and then rally again. Okay, so that's the way I'll be looking at that. I don't want to see it go down and retest a dollar from here if I was going to be a buyer. I'd rather see it just straight up break 125, start to look like it's going to curve up, and you want to see, and that for me start to get, I can't draw it. I might be able to draw it. It's a bit of a setup. It rallies, you know, you get the market, a big pullback, and then you get sort of this curving action, and then things start to accelerate on the upside. Okay, so that's what you're looking for. That big curving, and it's getting supported. So any bearish, you know, traders that are looking like, that's it, I've had enough. The world's going to hell. You know, the market's going to get smacked. There's going to be a big sell-off. I'm getting out. They're starting to sell, but it's getting supported through here. Okay, so you can see that. I think someone calls it ABC. I'm not sure it's ABC pattern, but that kind of action is really good because sooner or later it starts to accelerate higher. Once anyone that's selling it in here or has sold it, potential, they figure out they made the mistake. They start to realize they've made a mistake. It's going back up, and they want to be part of it, especially if they're a firm believer or an investor or, you know, that sort of thing, a value buyer or whatever it may be. They're starting to realize they're on the wrong side and they shouldn't have got out. So they're diving to get back in. Anyone that's been waiting, thinking it's going to go to lower levels, look, I'll buy it when it's down at, you know, down here. I'll wait till it gets down here. It's going to go down. And they start to realize they're not going to get it down to that level, and it's starting to rise. That's when you get that sort of fear of missing out and that spike, and it starts to run on. So ideally, that's your prime entry because you're not taking any heat on the market, on the action, and you're in when you're in a prime time when it's starting to accelerate higher. And then it's really trying to manage your risk as it goes up. So that's what I'd sort of be looking for here. That's why I say I just want to see it up to 120, not really go any lower from here. I want to see it up to 120, and then you might start to see it accelerate a bit more and volume to come in. Z1P, old zip. Yeah, it's going up on the daily. It's coming to that four. Four could be a bit of concern. $4 market stretched up here. It didn't really pull back much. You know, I think APT is doing all right too, isn't it? Yeah, so APT in the highs. Not a bad day on it today. So yeah, zip, girl, zip. It's a big bounce back. I mean, it's a massive fight back from that push down to a dollar from five, even five. You know, if you were buying it in here thinking it was great, and then you got that massive flush from four down to one, and it's bounced straight back. So if you're holding it from four and the markets are looking tentative, you can just imagine not everyone's committed on it. There's going to be people that have been looking at going, look, I've taken so much heat on that, it nearly tore me apart, and it ruined my account, all that sort of thing. We're getting stretched up here as we're approaching four, so there's probably going to be some, you know, redundant selling, or what do you call it, residual selling that could come into it and pop it down. Now, if that happens, you start to get some sellers as it's approaching four, start to pressure into it. It pressures down. Buyers, you know, not willing to buy it at extended levels, which I wouldn't. I wouldn't buy it up here when it's extended. I wouldn't go near it. Buy it up here. Lack of buyers, more sellers come in and just see what happens. If it does pull back and starts to hold three back on the MAs, then great. It's a good one. All right, so my view, that's the weekly chart. On that daily, I mean, looking at the daily, it is going up. If you're buying it here, your risk is below three, and then just see what happens. If it jams straight up through four and continues on, so be it. Okay, you might find it extends to four. I would prefer to wait than buy it now. See what happens on the pullback. If it pulls back and starts to hold, then it's a good sign that this buying pressure is going to outweigh that zone around four, and the sellers are not going to be that strong. And it's going to just go straight up and pierce straight through. But I'd rather buy it off a higher low on the way up than buy when it's extended. Okay, and you can see that volume is slowly starting to grind down. All right, oh, one more. We'll see how we go. INA, same sort of thing for me. That's extended. So you can see we've been talking about a few that are extended. I don't want to get, that's not buying off the MAs. That's buying well and truly away from the MAs. All right, so to me, again, wouldn't go near it. Weekly is getting on that extended level, so there's been a great recovery from the sell-off. Great recovery back to above, back above the MAs around 425. But I wouldn't buy it up here. Again, even off the daily, wouldn't buy it up here because you're buying it. You're expecting it just to grind up again or just spike higher, and you're expecting there's enough. Wouldn't say stupid people on the sidelines ready to get in, but that's pretty much what it is. Right. So for what you'd want to see from here, a pullback. Or what happens with a pullback? If it starts to get supported again like this off the MAs, then it's worth a buy. And you could probably get an inside level, like here. Inside level, I mean, that's your high. I'll draw it up for what I'm talking about. So when you're buying on the rise, it's good because you can get an inside level. Then when the herd starts to recognize it. So at this stage, if you're looking at here, that's your high you're contending with. Off the MAs here, higher, an inside level could be in that break. It's come back down. It's giving you a couple of opportunities. You bought on the break of that level, and then you just know there's going to be people above around 4 are buying, which they did. Accelerated through that level, retest, kept going. So you just know that there's going to be a lot of people with buying here with a stop below. The better way to trade that is this holds again. So it held here, held the MAs, popped up, some negativity in here, went down, held again, starting to rise. So that sort of negates this, that candle there, whatever you want to call that. It's coming off oversold territory. It's starting to push higher. You're buying an inside level because you're trying to front run these buyers here at $4, and then you've got smaller risk too. So that's the whole idea, is just trying to manage your risk a bit better. All right, we'll call it a day there, guys. Thanks very much for joining me. Like I said, if you enjoy what you see, it'd be great if you could leave us a like, subscribe to our YouTube channel, and you'll know that if you go to our website, there's been some more videos uploaded, some bits and pieces uploaded that you might enjoy. It'd be great if you can pass them on to people you might know, spread the word a bit, and then we'll go from there. All right, thanks for joining me, guys. We'll speak to you again soon. Bye-bye.